2025 was the year mortgages changed in Canada. Massive renewals, lower interest rates, and borrowers finally starting to breathe again. In this video, I will break down the entire year, quarter by quarter, the key numbers you should know, and what 2026 might look like for you. Mortgage debt hit around $2.3 trillion this year. We also saw a massive wave of renewals, more than 2 million Canadians renewing between 2025 and 2026, and the Bank of Canada cut its rate multiple times, landing at 2.25% by late October. Quarter 1 set the tone. The Bank of Canada began easing interest rates early in the year. Borrowers started to hope again. This is also when the renewal wave began. 5-year fixed mortgages from 2020 and 2021 started to coming due, which means many homeowners were moving from low 2% rates to much higher ones. This quarter was basically the warm-up for everything that followed. By quarter 2, mortgage activity picked up. Total residential mortgage debt climbed towards the 2.3 trillion marks. More people began applying again as rates slowly moved downwards. But this was also the quarter most people felt the real renewal shock. Bank of Canada data showed around 60% of people renewed faced higher payments, often 10 to 20% increase depending on their term. Quarter 3 was the busiest quarter. CMHC data showed insured mortgages activity rising, including over 19,000 homeowners units insured in quarter 3 alone, a 43% increase from last year. That means confidence of homeowners was coming back. We also saw a major shift back towards fixed rate, especially 3 and 5 year terms, because people wanted stability again. The quarter 4 brought the biggest headline. The Bank of Canada cut the policy rate to 2.25% on October 29th. At the same time, a Reuters survey suggested economists now expect rate cuts to pause for a while, maybe even until 2027. So, quarter 4 gave us relief, but also a reality check. Rates fell, but not forever. So, what did all of this mean in real life? For millions of Canadians, renewal payments went up. Not for everyone, but for most. Buyers started to return because lower rates made monthly payments manageable again. Now, let's talk about 2026. Number 1, rates may pause, but multiple cuts that Bank of Canada might hold steady. Number 2, the renewal wave continues. If your mortgage renews in 2026, get ahead early. Number 3, demand should pick up again as rates stabilize. That could mean moderate price increases in some markets. And number 4, watch your debt levels. Banks are being more careful and debt to income matters more than ever. In the last little while, the 3-year and 5-year Canadian bond yields jumped. And when bond yields rise, fixed mortgage rates go up. Fixed rates do not follow the Bank of Canada. They follow the bond market. So we can expect fixed rate to go up in 2026 if not stabilize. If you're renewing in 2026, shop early, compare fixed versus variable, and run the numbers for worst case. Let's see what 2026 brings for the first-time buyers and homeowners. It is going to be interesting. Stay tuned for the updates. If you're renewing, buying your first home, or just want me to break down your numbers, drop a comment saying renewal or message me directly. Make sure you subscribe for more mortgage breakdowns so I can save you thousands next year. Also, stay tuned for the biggest news I'm going to announce in January 2026.